What's up, ladies and gentlemen? Welcome to the Beat of Business with me, Ravi Wadan. Today, we're going to be talking about Lucid Motors and Churchill Capital. Now, many of you may have heard about Lucid Motors and Churchill Capital before, and many of you may be hearing about these companies for the first time. Either way, they are both making history, and in this video, I will explain why. You see, Lucid Motors is an upstart electric vehicle company that will be releasing their flagship sedan, the Lucid Air, later this year. What makes it more interesting is that the company is being led by a former Tesla employee, Peter Rawlinson. As a matter of fact, before becoming the CEO of Lucid, he was the former chief engineer of Tesla's flagship car, the Model S. Now that makes for a good story, but the story gets even more interesting when you consider Lucid is mainly being funded by Saudi Arabia's sovereign wealth fund. And the story gets even more interesting because Lucid Motors is going public via a blank check company, also known as a SPAC or Special Purpose Acquisition Company. Now, since Lucid Motors is a private company, that means that you and I can't buy their shares. They just aren't available. But Churchill Capital's shares are available, and they've been on fire based on the expectation that they will take Lucid Motors public. Now, the key word, if you caught it, is expected. Wall Street's expectation is that Churchill Capital, a SPAC or blank check company, will complete its merger with Lucid Motors as early as tomorrow. Assuming that happens, the Churchill Capital name will be dissolved and the two companies will together be known as Lucid Motors. You may have heard of Churchill Capital because it has been a tremendous stock market performer over the past couple of months. Right now, on February 22nd at 11:40 a.m. Pacific Standard Time, the stock is trading at $58 and was trading at around $10 as recently as January 8th. Now that's a 580% gain, and today CCIV is worth over $15 billion. To put that growth into context, had you invested $2,000 on January 10th, it would be worth about $11,600 today in little over a month. So essentially, we have a blank check company, CCIV, that doesn't have any holdings and is worth over $15 billion. Now that valuation sounds crazy, but that valuation is assuming that the merger with Lucid Motors will finalize. Oh, and before I forget, please don't forget to like this video for the YouTube algorithm, and please be sure to subscribe to my YouTube channel. If you missed any of my past videos, you can go to my YouTube channel or you can go to my website, thebeatofbusiness.com. Now let's talk about how SPACs work. Now this may all sound confusing, but I have a really great example of how SPACs like Churchill Capital operate. Now let's say I'm a well-known billionaire investor. I have an awesome track record of investing. I've made my clients billions of dollars in returns over the past decade because of my incredible foresight. I've been an excellent stock picker, and in some cases, I've bought struggling companies and turned them into high flyers by making leadership changes, product changes, organizational restructuring, etc. The point is that people trust me and trust my decision-making process because of my track record and historical performance. Well, now I, the billionaire investor, am on the prowl for the next big thing. But I don't want to invest in a public company. I want to invest in a private company that doesn't trade on the stock market and eventually take them public myself. In general, public companies are more well established and have already seen their hyper growth phase, and for that reason, I'm looking for a private company. One that has a solid product, a solid vision, and one that has a lot of upside potential so that can hopefully make a lot of money for myself and my investors. So what I do is I go out and file paperwork with the government and form a SPAC. It's essentially a shell company that doesn't own anything but intends to buy something in the future. This is why SPACs are typically called, or often called, blank check companies. So I have a SPAC and I'm out there looking for a solid private company to write a check for. Now, since I'm a well-known investor, people have heard about my newly formed, publicly traded SPAC, and they have been buying into it with great enthusiasm. Now, with each new person that buys a share of my SPAC, it essentially increases the amount of money I can write a check for. Now, in this real-world example, Churchill Capital is the SPAC, or the blank check company, being led by former Citigroup executive Michael Klein, and Lucid Motors is the hot private company with lots of upside potential. Now, Churchill Capital filed to go public as a shell company and has been raising money by trading on the public markets. And for months and months, it has been fairly clear that their target acquisition company is Lucid Motors. Investors seem to love this idea, and with each new positive news report that the deal is getting closer to finalizing, the more Churchill Capital stock increases. And that is why Churchill Capital is up over 500% in a little over a month, operating as a SPAC, or blank check company. Now let's talk about why investors love Lucid Motors. Investors have been extremely bullish on Lucid Motors. Investors like their battery technology, their product, their strategy, and their leadership. Lucid CEO Peter Rawlinson has a lot of automotive industry experience. He's worked in senior positions at Jaguar, Lotus, and most notably he worked for Tesla and was the chief engineer of the car that made Tesla a household name, the Model S. As you can imagine, as an investor, this is a big vote of confidence when you're investing in an electric vehicle manufacturer. If Peter Rawlinson was just another automotive executive, the story would not be as compelling. What makes the story compelling is the fact that he was a key component to Tesla's success and understands the electric vehicle industry about as well as anyone on the planet. Now, this is one of the reasons the Public Investment Fund of Saudi Arabia invested over $1 billion in Lucid Motors. They bought into Lucid's vision and invested in the company in April of 2019. Now, to date, this investment has largely been used to leverage the commercial production of the Lucid Air, Lucid's worldwide retail strategy, and development of their manufacturing plant in Casa Grande, Arizona. The second reason investors love Lucid is their battery technology. Lucid Motors wasn't always Lucid Motors. The company was founded in 2007 under the name Ativa and originally focused on building electric vehicle batteries and powertrains for other vehicle manufacturers. Now, Lucid's battery technology has been proven, and that is why they've been the official battery supplier of Formula E, the motorsport championship series that only uses electric cars. The packaging, the cooling, and cell efficiency innovations that they've pioneered in racing were directly applied to the Lucid Air, their premium electric sedan that's set to release later this year. This is important because Lucid isn't some company that is making promises out of thin air to raise capital. They've been at this for a long time, and their battery packs are state-of-the-art. And even though the Lucid Air hasn't been released yet, it promises to have a range of over 500 miles, and that includes 3 years of free charging through their partnership with Electrify America. For those of you not familiar with Electrify America, it is the largest public fast charging network in the United States. The third reason investors have been bullish is their product, the Lucid Air. The Lucid Air wasn't developed to compete with any existing electric cars. The Lucid Air is being developed with the intention to take market share away from flagship offerings of BMW, Mercedes, Audi, and Jaguar. Now, while many people love their Teslas, the interior quality and craftsmanship does not compare to the flagship offerings from the brands I just mentioned, and Lucid intends to change that with the Lucid Air. Not only that, the Lucid Air is fast. The top of the line model will have 1,080 horsepower, do 0 to 60 in 2.5 seconds, and run the quarter mile in 9.9 seconds. To put that in perspective, that's faster than most Ferraris, most McLarens, and the infamous 911 Turbo. And I know design and styling is subjective, but I think the Lucid looks incredible both inside and out. It has the awe factor that I would expect from something this expensive. And speaking of expensive, the price of the Lucid Air can dramatically vary depending on the specific model you opt for. The Air Pure, which is their entry-level car, has a starting price of $69,900. And that comes with a 480 horsepower engine with about 400 miles of range. Their most expensive model, the Lucid Air Dream Edition, starts at about $161,000, and that gets you an insane 1,080 horsepower and a 503 mile range. The Lucid Air will also come with Lucid Dream Drive, which is their proprietary advanced driver assistance system that features an array of 32 sensors, including the latest camera, radar, and ultrasonic sensors. This means that it will come with all of the driver assistance features that we've become accustomed to, like collision avoidance, pedestrian detection, and level 3 autonomous driving. Now let's get into my thoughts. There are so many interesting components to this story. Everything from leveraging a SPAC to go public, the Saudi investment, to what this means for the future of the auto industry. There is just a lot that you can digest from this partnership. Let's start with SPACs. They seem to be all of the hype on Wall Street right now as an efficient way to take a private company public. Entrepreneurs, business executives, hedge fund founders, politicians, and sports executives have all gotten in on the act, launching new blank check companies that are now hunting for acquisition targets. Now, because of this newfound interest in SPACs, there have been a lot of differing opinions on whether SPACs are good or bad for the markets. But I'm not here to argue that. I want to talk about the access and potential they provide everyday retail investors like you and me. Traditionally, when companies go public, most of their price appreciation has already been realized in the private markets, which you and I don't have access to. What I like about SPACs is that it gives everyday investors like you and me a chance to get behind an idea or investor by leveraging the public markets, which you and I do have access to. My opinion is that this is an awesome transformation of the capital market structure. I see it as a democratization of the financial markets where everyday people can act more like private equity investors. In terms of Lucid, I really like what they are bringing to the table. I think they're going to occupy a white space in the automotive market that hasn't been penetrated. I like their product, I like the fact that their batteries are tried and true, and I like that they already have a charging infrastructure, and I like that the car is premium and fast. The automotive industry is no different than any other industry going into the future. The companies that are first to market are going to dominate for years to come. When you look at it from that aspect, Lucid may be behind Tesla, but they are positioning themselves ahead of most auto manufacturers. What makes this story so interesting is that it's the first of its kind, but it won't be the last. With that, I want to thank everyone for watching this video, and please make sure to like this video for the YouTube algorithm and subscribe to my channel if you like content like this. I'll see you soon.